Welcome everyone to this explainer. Okay, picture this for a second. You lock your doors at night, you carefully monitor your bank balance, and you probably feel like you're doing absolutely everything right to keep your money secure. But, well, there's a relentless, invisible force draining your accounts while you sleep. It sounds crazy, right? But today, we're tracking down this silent wealth killer. And more importantly, we're going to arm you with the exact strategies you need to protect your purchasing power. So, let me ask you something. Is your savings account actually making you poorer? I know, we've all grown up with this deeply ingrained assumption that cash, just sitting safely in a bank vault, is completely secure. It's supposed to be the ultimate safe haven. But based on a new analysis by the financial experts at Numpact, that very assumption might be putting your financial future in serious jeopardy. Because, as you'll see, sometimes standing perfectly still financially is exactly the same as moving backward. Okay, let's dive into this and put a name to our invisible villain, inflation. As Numpact outlines, it's simply the rate at which the general level of prices for goods and services rises, causing your purchasing power to fall. And look, this isn't just some abstract macroeconomic buzzword reserved for Wall Street bankers. It is the core, mechanical reality of our daily economics. Understanding its exact toll is absolutely crucial to optimizing your long-term wealth and stopping those unnecessary losses. To put that into perspective, let's ground this concept in everyday reality. Imagine a basket of groceries that costs exactly £100 this year. With an inflation rate sitting at a seemingly subtle 3%, that exact same basket, the same eggs, the same bread, the whole shebang, will cost you £103 next year. Now, you might be thinking it's just £3, but it silently steals your purchasing power right at the checkout line. Your money is literally doing less work for you than it did just 12 months prior. Section 1. The heist, the silent wealth killer. And this brilliantly illustrates the trap. Let's say you do what you're supposed to do, right? You keep your savings in a bank account, earning a standard 1% interest. You check your statement, the number goes up, and it feels like a win. But towering right next to it is an inflation rate of 3%. So your account balance is mathematically increasing, sure, but the actual value of that money is shrinking fast. The math reveals a plot twist that completely overpowers your meager 1% gain. Well, here's the shocking reveal. That leaves you with a negative 2% real return. When your bank pays you 1% but inflation eats away 3%, you are actively losing 2% of your purchasing power every single year. You are essentially being robbed in slow motion. It doesn't show up as a neat little deduction on your bank statement, but it dramatically impacts what you can actually afford to buy in the real world. Section 2. The counteroffensive, protecting your wealth. So what's the game plan? We're certainly not going to just sit around and watch our hard-earned money evaporate. To fight back, your money must be put to work in wealth-preserving assets, things like stocks, real estate, and inflation-protected bonds. Rather than just hoarding cash in a standard account, you deploy your capital here to pace or even outpace inflation. This gives your money the momentum it needs to actually retain its true value over time. Let's move to Section 3, the intelligence briefing, essential financial context. Numpact stresses that executing these defensive strategies requires relying on authoritative models and federal allies. First up is the IRS. Now, why start here? Because tax implications can drastically alter the net benefit of literally any financial move you make. It absolutely doesn't matter if you beat inflation if you just lose all your gains to unexpected taxes. So always consult current tax brackets and deduction rules before making major financial decisions. Next up on the intelligence briefing, we've got the Federal Reserve. The Fed dictates the baseline interest rates that ultimately trickle down to affect your mortgage, your auto loans, and even the yields on those savings accounts. Keeping a close eye on these broader economic indicators gives you the macro-level intelligence to time your financial decisions perfectly, like knowing exactly when to lock in a fixed-rate mortgage or when it actually makes mathematical sense to refinance. Now, if you're venturing into the stock market to build that wealth, you absolutely need to look at the Securities and Exchange Commission, or the SEC. Transparency is key when evaluating a corporation's financial health. The SEC provides invaluable resources for researching public companies and understanding market regulations, which is just critical for ensuring your investment portfolio is well diversified and your risks are properly mitigated. And finally, meet your ultimate defensive shield, the Consumer Financial Protection Bureau, the CFPB. If you're dealing with lenders, navigating the maze of credit bureaus, or facing debt collectors, you need to know your rights. They offer incredibly authoritative guides on navigating credit reports, disputing errors, and actually understanding all that tiny fine print hidden in your loan agreements. So, with all that context out of the way, this brings us to a highly personal question. We've looked at the math, we've looked at the resources, but I want to bring the stakes directly back to your own vault. Exactly how much purchasing power are you losing right now? Because until you know your own numbers, you really can't build a proper defense. Well, the good news is you don't have to guess. Right now, I want you to click the link in the description below to use the Numpact inflation calculator. It is completely free, highly accurate, and incredibly easy to use. By combining this precise calculating tool with the authoritative guidance we've covered today, you're putting yourself in the absolute best position to make informed, mathematically sound financial decisions. Seriously, go check the description and click that link. So I want to leave you with this final thought to chew on. Are you letting inflation dictate your future, or are you taking control today? Remember, this silent wealth killer thrives in the dark, just relying on the fact that most people leave their cash sitting still. But now you know the mechanics and you have the exact tools to fight back. It's time to stop being a victim to invisible economic forces, do the math, and take command of your financial destiny. Thank you so much for joining me on this explainer, and I'll catch you next time.